Hey everyone, Roger Herring here. I am the Investor's Accountant. It is so good to be with you today. Happy April Fool's today. I'm taping this on April 1st. So, you ready to get in it? I am. I get asked all the time, where should I set up my LLC? Should I set it up in my home state? Should I be in Nevada, Wyoming, Utah? Tell me where. Well, I'm glad you asked because I do have a very defined opinion on this. Here it is. I really don't care where you set it up because for tax planning purposes, I'm planning mainly at the federal level. So if you've got a reason for asset protection for setting up outside of your home state, great. If that's what helps you sleep at night, go for it. But I'm not a big fan of using out-of-state LLCs in every single case, especially in the beginning and especially when it comes to holding assets. So let's talk about Roger's vision of asset protection. Okay, first thing is be a good landlord, be a good business person. Treat people with kindness and with respect. That's the very first thing that's going to protect you. The second thing is your insurance, whether it is your liability insurance or your property insurance. The third thing that's going to protect you is your LLC, wherever it's set up. We want to prevent the liability that is inside your LLC from coming across and becoming your problem. Now, if a judge does let it come out of your LLC and become your problem, you should have an umbrella insurance policy between you and your LLC. Now, that's my vision of basic asset protection. Now, let's talk about, do I set up in my home state or do I set up in another state? Let's first talk about this from a pure tax standpoint, okay? I live in Georgia. My business is in Georgia. Georgia has the right to tax Roger's income. Roger's company has employees in 4 different states. Because I have what's called nexus, that means a defined business presence, I have to allocate my income over those 4 states. They have the right, but let me keep it simple now. What if I live in Georgia, but all my business is done in Florida where there is no state income tax? Georgia still has the right to tax me because I live in Georgia. What if I live in Florida and work in Georgia? There's no income tax in Florida. But because the revenue was earned in Georgia, Georgia has the right to tax the income. But if you live in Florida and you only work in Florida, there is no state income tax unless, of course, you are a C corporation, and then in some cases there is. Let me tell you something about states that say no income tax. That's usually no income tax on an individual. Oftentimes, such as the case of Florida or Tennessee for that matter, there are taxes that pertain to businesses. So be careful what you do and whose advice you take. All right? So my theory is if I'm working in Georgia, I'm going to set up my LLC in Georgia. If it's my ordinary LLC, my operating LLC, well, my business is here. If I get sued, I'm going to get sued in Georgia. I'm going to have a Georgia LLC. Now, let's say that I have a rental property in Georgia and I have another rental property up in North Carolina. Well, I'm going to have a Georgia LLC for my Georgia property, and I'm going to have a North Carolina LLC for my North Carolina property. How many LLCs do I need? Well, I've got another video on that. It's called that, as a matter of fact. How many LLCs do I need? Go check that out, okay? But now, let me explain something else to you. There are times that I use out-of-state LLCs. And one of those times is if my assets, like rental properties, I have more than $750,000 in equity. Yeah, now I am going to create a top-level LLC, multi-member if I can, okay, because by being a multi-member, it's going to take the rental properties off my Schedule E and put them on a partnership return that has a lower audit frequency. But what I want to do, what I'm after, is something called charging order protection. You see, a state like Georgia is not a charging order state. A charging order means that if somebody sues me personally and they get through all my insurance, they can foreclose the assets held in my LLC and sell them off. Okay? But a charging order state, all they can get is a lien against the income on my LLC. So if I am in a non-charging order state like Georgia, and I've got $750,000 worth of assets, I'm going to go to a state that is a charging order state, and I am going to set up a multi-member LLC, all right, with the partners are myself and my wife. I'm setting this up in the charging order state. And let me tell you, there are 20 states that will give charging orders to multi-member LLCs. Well, Roger, I'm single. What can I do? Well, there are 3 states that will give a charging order protection, what we call COPE, charging order protective entity status, to a single member LLC. Those are Wyoming, Nevada, and Delaware. Okay? That's one of my main reasons for using out-of-state LLCs. I have significant assets. Okay? Another reason to use an out-of-state is if you need special laws and special protections. For instance, there are a lot of insurance companies and credit companies that are set up in Delaware. Some of the tax strategies that we use, Delaware has more favorable laws, so they're set up in Delaware. Okay? If it is necessary to accomplish a business goal, by all means, do it. If it helps you sleep better at night to form in Nevada instead of Georgia, go for it. Just understand, it's going to cost you more money. The one thing that I absolutely cannot stand, though, is people in the beginning that go out and set up these large structures and pay these large sums of money to attorneys or to programs to set up all these entities in Nevada, and they don't need them. What I'm going to ask you is, look at how much they're proposing that you pay for this protection. But do you have any cash flow right now? No, you don't. Do you have any assets to protect? No, you don't. So we exercise some common sense. We can always restructure and put another entity over our local entities, okay? Many times, it's better just to form in your local state and buy the appropriate insurance. You need the insurance anyway. That's it for today, gang. I hope you've enjoyed this. If you got any questions, just put them in the comments. I'm happy to answer them. And until the next time, Roger out.